Could consolidation at the foot of the ATH mean that Bitcoin is about to reach new highs? Or will the saying, sell in May and go away, prevail here? Are you curious about the answers to these questions? Let's get started. Hey there, welcome to another episode of the Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and the selected altcoin. We meet up and, as you know, we take a look at the charts from three perspectives: technical, on-chain, and our fantastic fire charts. That means you won't find such condensed analytical knowledge as we serve here absolutely anywhere else on the internet. You've appreciated this because our subscriber count has surpassed the magical number of 50,000. Now we are aiming for 100,000. And we reached 50,000 with your help, so we reach 100,000 with your help as well. Why? Because I know that under the previous video, as many as 34% of people who watched it weren't subscribed to this channel. So this is the right moment to change that. If you like crypto market analysis, if you're interested in any way at all, be sure to subscribe, leave a like, and hit the bell so you'll be reminded about future videos. And leave a comment, preferably a contest entry, because there's a contest at the end of this video. And remember, the content of this material does not constitute investment advice. For advice, consult a licensed advisor or simply do your own research, which I strongly encourage you to do. So if you're ready, grab your coffee. Let's get started with the analysis. Bitcoin is now just 1% away from reaching a new all-time high. We can see a consolidation happening right below the peaks reached just a few months ago. And most importantly, we can also see that the last candle, yesterday's Tuesday candle, closed at the highest point in the history of all daily candles on the Bitcoin chart. This is a very good signal. It means that the selling pressure is, at least theoretically, a bit weaker at these levels, which could potentially result in a breakout to the upside. Of course, I wish this both for myself and for you, but at the same time, everything tells me to remain sensible and take a look at the indicators. And I will focus primarily on two of them. The first one, of course, will be our classic RSI. I'm referring to something we discussed in previous videos. Already 2 weeks ago, I mentioned that I expect that in these areas where the RSI has reached specifically, the so-called overbought zone, in this case, a bearish divergence may form, which could signal a local peak. And attention, this divergence has just appeared. I'm marking it on the indicator now. It will be marked here with a yellow line, and I'll do the same on the price chart. And now I'll explain what this is about. We're talking here about a situation where the price is moving upward while the value of the indicator, the value of this buying strength, is decreasing. This is happening right at the all-time high ATH. Well, this is a very dangerous moment, which suggests to me that, hey, we might be seeing what's called the double top here, or maybe even a triple top if we count the peak that was formed back in December last year, then another peak that was reached again in January, and now we're seeing a very similar situation. It is very reasonable to expect that the rebound from these levels could occur here. I can see the potential here for some very interesting candlestick patterns to form. For now, I won't mention them yet because there isn't enough data, but the potential is already emerging. However, it's also worth looking at the volume, and the volume is also sending us a worrying signal. Here at the base, we can also see the volume bars. We can see that quite high volumes appeared in April. Later, during the breakout, more of these volume clusters appeared, quite strong. And the bars here are already a bit lower. But considering that it lasted for several days in a row, there really was quite a lot of volume. However, the further we go, the more we see that these volumes are unfortunately lower. What could this mean? Well, it confirms what we see on the other side, that the buying strength is unfortunately weakening. If you're interested in what volume actually is and how to interpret it, I encourage you to visit Kanga University. The lesson about volumes is pinned in the comments, or rather in the description below this video. Be sure to check it out and learn more about volume. Besides that, it's also worth paying attention to other indicators. Let's quickly take a look at the MACD. And the MACD is giving us a negative scenario here, a negative signal. We can see that a bearish crossover is occurring here, and this might result in somewhat deeper decline. Where would I expect the ongoing correction to go? Well, a fairly reasonable level, which I still maintain, is around $100,000. This is partly because some wicks have already reached this area. It also comes from history, as there were resistances here, so it's a very logical point to test it from above as support. A possible second support level in this case could be $98,000. It's also worth taking a look at another indicator. In this case, we're talking about moving averages, but not directly as support or resistance, but rather about a potential golden cross that could occur right here between the 50-day moving average, which is our red line, and the green line, which is the 200-day moving average. This bullish cross is known as the golden cross. When it happens, and it certainly we'll take a closer look at the history of such events and exactly what impact they had on the market, because this is a highly publicized event that is often widely discussed in the cryptocurrency space. You've probably heard about Fibonacci retracements more than once. I very rarely use them in my materials. Why? Because in my opinion, Fibonacci retracements can at most confirm certain levels that we have already observed, but not determine the ones that Bitcoin will reach. But there are exceptional situations when it's worth using Fibonacci retracement. This is trend-based Fibonacci, which is a slightly different form of Fibonacci that tells us in situations when Bitcoin breaks above previous highs, what values it might reach at the moment when Bitcoin surpasses its previous all-time high. I hope you'll stay here with me because I will be referring to this indicator. Be sure to stick around and see what happens. The technical chart tells us that Bitcoin is encountering resistance and will most likely bounce off. Interestingly, fire charts confirm this exact scenario. Let's take a look at the chart. The blue line represents the price of Bitcoin, while the horizontal lines are volume lines below our blue line. These are buy volumes below, and above are sell volumes. The brighter the line, the more volume there is at that particular price level. Let's first look from the bottom. We can see that currently Bitcoin is trading around $106,000, and there are some buy volumes here that are, yes, accumulating, and at the moment exceed $10 million, so there is some support here. Let's remember to treat these proportionally, not precisely, because these are not complete volumes, but rather certain proportions that appear on the market. Moreover, it's worth noting that in the case of deeper drops, stronger support appears around $102,000, and here as well, we have $10 million in USDT waiting to buy Bitcoin at those levels. The next supports are around 100. Here, the volumes are increasing, already exceeding 11 million, while around $98,000 and $8,000, the volumes surpass 12,000. However, let's take a look at what is happening above. I'll even switch the interval from weekly to daily, and let's notice that around $108,000 larger sell clusters are already appearing. And here we have over $14.5 million in Bitcoin waiting to be dumped onto the market. And the higher we go, the more these volumes increase. And a very important area is around $110,000. Here, the total volumes reach as much as $73 million. Let's take another look at the weekly interval. I'll reduce the scaling to show you something. Let's focus solely on this line. This is the line that is currently at $110,000, and just a week ago it was quite dark, but day by day, with each passing day, it is becoming brighter and brighter. What does this mean? It means that sell orders at the $110,000 level are only increasing. There are more and more of them appearing there. What could this mean for Bitcoin in a broader perspective? Well, it means that even if Bitcoin reaches a new all-time high in the coming days, it will most likely be a false breakout, which will result in liquidity being taken, those sell orders being triggered, and unfortunately the price being pushed lower. Let's look at the CVD and define who is currently interested in the market. We can see our colored lines. Let me remind you, the orange line represents retail traders, and they are not buying at the moment. Interestingly, the market is currently being driven by whales, which is our brown line. They are continuously buying as well as the purple line, which represents the second largest wallets, those holding between $100,000 and $1 million in their balance. And the green line, just to note, for the record, represents wallets holding between $1,000 and $10,000 waiting to buy Bitcoin, and they are currently making purchases. However, let's remember not to fall for a certain illusion. Let's keep in mind that whales, that is, are brown linear, those wallets that can make a lot of money nominally, even on very small price movements. So the fact that they are buying now doesn't necessarily mean that if the price goes up by just 1%, they won't start selling. Ethereum is following the scenario outlined a week ago. So what exactly is happening? Let's take a look at the chart. We can see that Ethereum has reached our gray box, which is a resistance zone that was a resistance area a long time ago, and also served as a support zone. We expected the price rebound here, especially since the 200-day moving average hour green line is located right around this area. All of this was further compounded by the RSI, which sent a very strong bearish divergence signal, a bearish divergence that moreover is occurring right in the overbought zone, the so-called overbought area. This tells us that the divergences appearing there are extremely powerful and usually have a very sharp impact on the. We can see that the indicator is moving downward, while the price breakout peaks were moving up. What could happen to Ethereum in the near future? Well, in my opinion, there is a possibility that Ethereum will try to push up to those levels once again. But unfortunately, I do not expect those levels to be broken through. I rather expect that Ethereum will move downward, because let's remember that recently, basically within a single week, it increased by 50%, which is a lot. So profits may be taken here. How far could Ethereum fall? Well, I see the wicks of these candles here reaching around 2,330, and it seems very logical to me that Ethereum would retest these levels again. All the more so because these levels coincide here with a local peak, a small local breakout, which may not be particularly significant from a technical standpoint, but it's worth keeping in mind that a rebound has already occurred from these areas. If these areas don't hold, then only later would I expect a drop to around $2,100. Will this happen within the next week? I don't think so, although it's worth keeping such a scenario in mind. Let's also take a look at the volumes, because we just mentioned the volumes for Bitcoin, so it's worth referring to the volumes in the case of Ethereum here as well. And here as well, we can see that they are trending downward, although the most recent ones were still quite strong. The ones from about a week ago were quite strong and showed a significant breakout, whereas the subsequent ones here are no longer as strong. We can see that a certain support level was reached here, and the volume was relatively high but lower than the previous one, which may indicate that the buying power for Ethereum is at least temporarily weakening slightly. Meanwhile, the situation on the fire charts for Ethereum looks quite dynamic. It is worth noting that while recording this material, there were some sell volumes at the 2,600 level which have disappeared, and at the same time slight declines appeared. As a result, this most likely means that liquidity was absorbed here and the price was pushed downward, where from the level in this case, let's check exact, from 2,520 down to 2,450, buy volumes are appearing. Of course, there are more of them at the higher values and a bit fewer at the lower ones. But we can see that the bulls want to push the price of Ethereum up, at least in the short term. And who is the bull? Well, it's worth looking at the CVD, and here we see a copy of the situation from the fire charts on Bitcoin, meaning the brown line represents the whales, the largest wallet. The purple line represents the second largest wallet. And the green line, which represents wallets with a size from $1,000 to $10,000, these wallets have been buying. By copying Bitcoin, they're also buying Ethereum. Now it's time for an altcoin. And today it will be Solana, meaning an update after 2 weeks. And here it must be said that Solana is behaving like clockwork, exactly as we predicted. We mentioned that Solana has everything it needs to break through to the 200-day moving average, and that's exactly what happened. And here, at the 200-day moving average, there was a slight breakout, which might be a false one, and then there was an automatic rejection, a rejection of that value, and a drop to around 100, actually, even below $160,000. This is a very important area, because we pointed out a long time ago that there is support horizontally at the level of 157. And attention, in my opinion, this support may be tested once again. Why? Because we have a clear rejection here. And besides, on the RSI, we can see that we're approaching the 50 level. The 50 level would be a natural support, and if the price actually reaches this level, or rather, if the indicator reaches it, but it has to be correlated with the price movement. If at the same time $157 is reached on the price chart and 50 on the RSI, for me that will be a clear signal to buy right here. Besides, it's worth mentioning that we are dealing here with a certain bullish crossover, which will soon occur between the 50-day moving average and the 100-day moving average. It's not particularly significant, but it's worth keeping in mind for the rest. As for the volumes, just like with the other cryptocurrencies, that is Bitcoin and Ethereum, they are declining, which means that the buying power for Solana is currently, unfortunately, weakening somewhat. Let's take a quick look at the fire chart for Solana. A quick report, that is the resistances, we can see they are clearly marked at the levels of $170 as well as $180. If we're looking for support levels, the more significant ones can be found around 160, which is the level we just discussed a moment ago. Who is buying Solana? Once again, it's the whales who are in the game, steering the market, the purple wallets, which are the second largest. And attention, here we also see retail investors, represented by our orange line, who are also buying Solana at the current price levels. And if you'd like me to analyze your altcoin, Remember, it's a very simple thing. All you need to do is check out Kanga. You'll find the registration link in the description of this video. Browse through the cryptocurrencies we have and choose the one that interests you the most. Post information about it in the comments under this video. Just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be KNG. And third, it can't be any meme coin. So you know what to do. Let me know in the comments which crypto you want to see in the next video. So sell in May and go away? Well, not necessarily. It seems that Bitcoin, basically sitting just below its all-time high, could break through and set a new value at any moment, and that might happen. But in my opinion, it would likely be short-term. The indicators are telling us that buying power is weakening and a correction should appear here. Will it be a deep correction? In my opinion, no, but a period of consolidation in the near future is much more likely than a strong break. Will there be major sell-offs? I don't think so. This is too high a price level for Bitcoin. It deviates from the standards we've seen so far for us to experience significant sell-off. That's why when it comes to Bitcoin, I'm quite calm in the short term, or actually even in the medium term. Besides, the saying sell in May and go away mainly refers to how investors behave on the American market. And here it's worth paying attention to what's happening with ETFs, and we can see that our volume bars are still high. These are very positive signals indicating that the interest in buying Bitcoin in this case is very high. These bars are not higher than those that occurred just a few weeks ago at the end of April, but they are still high, which leads me personally to assume, at least in this case, that cryptocurrency investors are buying into ETFs and will be waiting. They have no intention of selling, at least in May. On-chain report. Let's begin. Today, I've prepared 4 metrics for you. We'll start with the amount of stablecoins in circulation. And here we see our chart. The orange line, as we know, is the indicator line. The gray line is the Bitcoin price line. And we can see that for a very long time, the amount of stablecoins on the market has been increasing. And what are stablecoins used for? Purchases. So if their amount on the market is growing, it has a positive impact on the price, whether it's Bitcoin or other cryptocurrencies. Let's also pay attention to the behavior of wallets with specific balances. Today, we'll mention only 2, those that hold 1,000 Bitcoins or more, as well as those that hold 10,000 Bitcoins or more. The first group has long been defined by us as those often held by ETFs, and we can see that the amount of Bitcoin in these wallets is increasing. There's absolutely no doubt about that. The metrics don't lie. However, let's remember that there are also local resistances here, so some sell-offs may occur. What is happening with wallets holding at least 10,000 Bitcoins or more? Let's note that just a few weeks ago, probably 2, if I remember correctly, we mentioned that there was a certain increase here to 93, 94 wallets. Later on, their number decreased to 91. Currently, we see that they are returning to the level of 93, so it looks quite positive. We're not seeing ongoing sell-offs here, and perhaps we're simply dealing with what's called a redistribution of large wallets into smaller ones, or vice versa. It could simply be that Bitcoins are being transferred from one wallet to another, which results in increases on both sides, as well as temporary declines on those same wallets. And then there's also the amount of Bitcoin on exchanges. Maybe we're not hitting new lows here, but it's worth noting that we're hovering around the lows that were set a long, long time ago. These aren't all-time lows, they're local lows. Let's look at this from a broader perspective. We can see very clearly that these are not all-time lows, but the amount of Bitcoin keeps decreasing. This level, where Bitcoin currently stands in terms of its amount on exchanges, has been tested from above multiple times, and I expect that it might be broken in the near future. Does this have to happen within the next few days? Not necessarily. It could happen within the next few weeks, but the trend remains very clear, and above all, it is downward. And what does that mean? It means that it is, above all, favorable for the market. It's time for a contest. As always, let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's material, so it can be Bitcoin, Ethereum, or Solana. Present your analysis from a technical perspective, on-chain, fire chart, sentiment, fundamentals, whatever you like. And remember, you absolutely don't have to agree with it. The author of the analysis that I find the most interesting will receive 20 KNG from me. And the winner for last week is Tomasz Inaine, who analyzed Bitcoin. A very nice comment. I kindly ask you now to contact support to claim your prize. That's all for today. If you enjoyed this and it's your first time here, be sure to subscribe, and I encourage you to come back for updates. Please also rate this episode on a scale from 1 to 111, where 1 means it's weak, bland, and you don't want to see more of this. 111 is fantastic and I want more of it. And if you want more of this, well, I'll see you next Wednesday. Bye.